Hi, William. Welcome to the Power Talk show powered by Business Talks Weekly. Thank you for accepting our invitation and joining our channel today. Before we dive into a conversation, can you tell us a bit about your background and what led and what inspired you to start Raise AI?
Yeah, absolutely. Thank you for having me on, Naveen. So my background really in technology starts when I was very young. When I was about 5 years old, we got our first family computer, Windows 95. I was just kind of blown away by how computers worked, and I took that computer apart completely, and I got in big trouble for doing that. I was able to put it back together successfully, but that is really is where it all started for me. And then from there, I kind of went down this journey to become a self-taught software engineer. So I call it YouTube University, but this is back before YouTube was what it is now. So I did a lot of free online courses, a bunch of paid online courses, and eventually I landed my job at an AI company, enterprise level AI company that was working with really large clients globally. So I've had the opportunity to consult for companies like PNC Bank. We've done work for Verizon Wireless, Disney, Nike, JP Morgan Chase, building AI and automated tools for these companies, at the enterprise level. Fast forward, I got into real estate investing almost probably 8 years ago now. And I into this world of real estate private equity shortly thereafter. And I discovered that it was a very, call it low leverage community. I mean, people were not really leveraging technology at all. People, to raise capital for their ventures, their real estate ventures, they'd actually have a physical Rolodex, an actual Rolodex, and just go through calling people on the phone all day. And so I came into the space and I said, guys, there's a more efficient way to do this.
Right.
And organically, Raise AI just kind of became, and now we launch AI and automated solutions for real estate private equity companies all over the country and actually globally. We have a handful of clients that have projects outside the United States as well now.
Wonderful, wonderful. So, William, can you explain more about how Raise AI works and how it is solving the challenges of the traditional real estate investors?
Absolutely. First, I'll kind of give a high level overview of real estate private equity for the listeners who may not be familiar, right? Here in the United States, if somebody wants to, and probably in most parts of the world, honestly, if somebody wants to say build an office building or an office park, right? It's not one very wealthy person who just has millions and millions of dollars to put into this individual project, right? Multiple people who come together and invest in that project together. And typically there's an operations team, right, who maybe found the property and kind of structured the entire investment, and they're kind of the ones running things. And then you have a secondary group of limited partners, or LPs as we call them, who are just the passive investors. Essentially, they put in capital into this fund or into this entity and they get returns based on the revenues generated by that entity. So a huge bottleneck is that capital raising process, right? Because oftentimes the people who are good at finding opportunities and structuring opportunities don't necessarily have that same facility for finding the money to then go and back those opportunities. So that's where people kind of would work the phones, you know what I mean? Just kind of working through their community or through their, what do you call it, like their sphere of influence to try to find a capital to fund their different opportunities. So the way Raise AI works is that we leverage AI to help solve that problem in particular. We help real estate private equity funds and operators find investors. So in the United States, there's some laws and guidelines that you have to follow in order to invest in these kinds of projects. You have to be what's called an accredited investor, and there's some specific qualifications that go along with that. So we use AI to help you find accredited investors online, wherever they may be, LinkedIn, Facebook, email, through your own network, wherever that may be, public events. And then we use AI to actually help you initiate that outreach and those conversations with those investors, whether you're raising for a specific project at the moment or not. Just start to build those relationships. And then once someone has a call with you, we actually leverage AI as well to help you to walk them through the process of investing into the deal, right? So once you tell somebody about the opportunity, that's not the moment where they're going to send you, you know, $100,000, $200,000. There's more that goes into it, more conversations probably. There's some documentation they have to fill out, and they always have questions about that sort of stuff. So we plug AI into all those steps of the real estate private equity capital markets process.
So basically, if I am a developer and I am starting a project, I seek funding, I will come and list my project into your platform, and then your platform will help me source investors who can invest in my project.
Absolutely. Yep.
Understood. William, can you tell me, tokenization is being a talk of real estate industry right now. And with tokenization and AI, how will these two work together and what will be the benefits a real estate investor can take with tokenization?
That's a really, really great question. So there's a unique problem with real estate private equity that maybe you don't see as much in other forms of private equity, in that there's no resale market for shares of real estate private equity. Meaning, if I come into a project and I say, I put in my, you know, $100,000 or whatever the number is, and the project is supposed to take 10 years, right? And I'm getting my little cash flows in between, but I have family life event and I say, oh man, I need to pull out my initial investment. In many other forms of private investing, you can sell your shares of whatever, you know, investments you made on some secondary market, right? You think of the stock market is a secondary market for equity shares, right? In businesses. Well, real estate private equity doesn't have such a secondary market for a lot of reasons. A big problem is, how do you value a share of real estate private equity? Because it may not necessarily be based on the value of the building. It could be based on the amount of cash that the building is generating, revenue the building is generating, where it's at in a specific construction, the phases of development, all those sorts of things. So tokenization could really play a big part in helping with that, with kind of detaching the investment from the property directly and being able to assign those values to those tokens, and kind of creating an easier way to transfer those equity shares between individual investors. That's just one way that I think it'll solve the issue as well. Other problems that it could tackle is for different types of equity investments. In particular, when you look at something like mobile home park communities, which we have a lot of here in the United States, they're very disparate and disorganized. There's not a lot of record of transfer of ownership and growth within those individual properties. And obviously tokenization helps with that sort of thing a lot, right? With the creating a record of things on a blockchain.
Absolutely, absolutely. So, William, are you currently focusing only on funding new projects, or are you also allowing people to list properties or commercial properties that they want to sell?
So currently we focus on finding funding for new projects. We don't necessarily, so where we do have a marketplace in the works, but again, that's for connecting investors to investment opportunities. We don't really transact too much on the sale side of properties just yet.
So, William, can you tell me what is the biggest challenge in scaling a prop tech?
Oh man, lots of challenges. So uh, I would say specifically focusing on an AI company, the biggest challenge is AI itself. The growth rate of AI is maybe unlike anything. I would definitely unlike anything I've experienced. And working in the industry, you know, for going on 15 years, there's never been a period where there's been so much development when it comes to AI. There's a new tool every day. Obviously, there's a new model every day. There's a new company every day. And that's not hyperbole. Literally every single day, there's a new thing, a new way to use AI. And so that's a challenge, in that for us as Raise AI, we really have to make sure that we're clear on what our vision is, what the problems are that we're trying to solve, so that we don't get distracted and pulled into all these other things, right? All these other, they call it shiny objects that can pull us away from our real mission and vision.
So, you work with both. You work with the developer as well as you work with the investor, right? How much profit an investment might yield in an investment when they tie up with Raise AI?
Yeah, so I mean, the types of opportunities that we have with our clients really, really vary, which is so cool, because what we're able to do with AI is understand what specific groups of investors are looking for, right? So the cool thing is we're able to really analyze what attracted an investor to a specific opportunity. And so now we know what kind of investments to serve that particular individual, right? So through things like, landing page heat maps and tracking their activities and how they interacted with the AI, through the chat interfaces we have as well, we can really understand what this investor's goals are. And so we can present them more opportunities that fit their mold, so to speak, or just to fit their goals. So when it comes to returns, it really varies based on the kind of project. We have, for example, clients who are doing new hotel development, right, which is a lot of upside, a lot of potential returns, maybe 3x on your investment, but it takes a long time and there's not really any cash flow in the middle, right? On the other hand, we have clients that are debt funds, for example, meaning they raise capital to lend on other projects. Those investments have very low upside, but they produce quarterly cash flow on a very steady basis. So it really depends on what the investor is looking for. Some people want the cash flow. Some people are more kind of willing to take a little more risk and look into those development projects with higher upside.
Understood. So, William, are you also planning to scale or, diversify Raise AI to other regions like in Dubai, in Singapore, where the real estate market is booming?
Yeah, so like I said, we actually have had clients who are working on projects in Central America so far, and we're definitely open to it. We're actually talking to a client right now, potential client right now, who's working on different projects in lending projects in Italy. So we're definitely open to different world markets because again the inefficiencies are problems that everybody faces globally, right? In trying to find capital. The interesting thing is the challenge there to dive into it a little bit is the legal structures differ greatly from country to country, obviously, right? So I mentioned a little bit earlier about the requirements for investment into private equity opportunities here in the United States. Well, we have a lot of people who actually raise money from overseas investors. So we have a lot of people who actually raise money from Dubai for projects in the United States, people who raise money from Canada for projects in the United States, clients who are in Canada who fund their projects with money from the United States. And so for us, being that we are an intermediary in some of these situations, we have to also take some time to educate ourselves on what the different requirements are and laws are with regard to structuring these opportunities too.
So, you talk about AI, you talk about technology, you have been into the industry for such a long period. What do you feel in the next 3, 4 years? Where is the biggest disruption in AI going to happen?
Good question. I have my closest eye on robotics, AI for robotics applications, because I mean, generative AI, I think everybody's pretty used to right now, the chat GPTs and Claude and all that sort of stuff, right? Agentic AI has becoming more and more popular, especially in 2025. We've seen some really cool tools, come out that have some agentic capabilities, and that's all good. But I think the major disruptions come in where there's more physical manifestations of AI, and that's going to probably be through some kind of robotics, right? So when start to see more adoptions of things like self-driving cars, there's a lot of interesting applications for robotics, right? In robotics right now, but they also face major challenges. One of them being production of robotics period is still cumbersome, right? I don't think we've really solved those issues, at least not on a major scale. So it'll be interesting to see how that develops. But that's really the area I have the closest eye on. And kind of long distance, like general intelligence is a difficult, I don't know. I don't know that we will solve that, to be honest with you. But we'll see. Maybe it already exists and I just don't know about it, right? So that's probably the government probably already has it.
We don't know.
Yeah, exactly. Who knows?
So, William, if you look back at your journey, what is the one thing you might have done differently if you go back? One thing that you might have done something different to grow or to scale.
Yeah, I would have started sooner. So, interestingly enough, a little bit of backstory on how the company Raise AI started, right? I came into the real estate private equity space and I was a part of a mastermind group, kind of a community of like-minded people who, some people were just getting started like me, other people had hundreds of millions of dollars in assets under management, et cetera. And I saw the inefficiencies. And so when I started to raise capital for my own projects, I built the same tools that Raise AI, does for same services. I built those for myself originally for my own small private equity company. Within this community, people would ask me for help and I would just do it for free. Honestly, I would because it comes easily to me. I have a facility for technology and things like that. I was very familiar with how to set up these systems and tools. And so I would do it for free. And I did it for free for so long that one day I was taking too long. Someone asked me for help with something and he says, "Man, you're taking a long time to do this. Would you go faster if I paid you?" And I said, "I probably would go faster." Yeah. So that's really how the business started. But in that time that I took to go from, just doing this for free to actually starting a company, I admit I lost some valuable lead time on competition, right? Because what AI has also done is lowered the barrier to entry for any software-based business, any, you know, computer-based anything. AI has lowered the barrier to entry for that. So I could have gotten a bit of a head start, I feel like, just because of my background in the industry. So that's something that I kind of keep in mind now is just to be a little bit more aggressive when it comes to taking advantage of windows of opportunity that I see.
Understood. William, one final question. There's global economic tension across the world. Everybody is, they are all taking a back seat. What would be your advice to an investor who is investing in a real estate market or any other market?
Great. I was literally thinking about this morning. A few things. One, now is not the time to be speculative, in my opinion. So a lot of offerings are very speculative, and I don't think it's the time for that. There's a lot in times of uncertainty, like when you have a speculative investment, you already don't know what's going to happen. You're just guessing at different outcomes. And if this happens, then we'll do that, right? So you compound that with the overall uncertainty of the global economy, like you said. I think now is the time to get back to boring. During COVID here in the United States, there was a pretty serious real estate bubble, which continues to some extent. Prices haven't really come down on real estate very much at all. In the commercial space, we've seen some compression, but not major compression. And so because of that, but most of that was just the market, right? That all of a sudden the real estate investors became super smart and talented and efficient. It was just so happened that they bought the property in 2018 and then they sold it in 2022. It was like,
Yeah.
man, I guess everybody made a whole bunch of money. And
Yeah.
so investors kind of got an appetite for that, right? After you have two or three transactions or two or three investments that are giving you 3x money and 4x and your mind is blown. You think you found the golden goose. People may start to think that that's how it always works when in reality, that's not how real estate works at all. In fact, real estate is a very slow, boring investment vehicle, which is why banks use it, major institutions use it. It's just like, listen, we're going to go at this nice, slow and steady pace. And I think this is the time to get back to that mindset of like, listen, guys, we're going to go nice and slow here. Let's not make any incredible promises that we won't be able to deliver on because nobody knows what's going to happen tomorrow or the next day after that. So that's my biggest piece of advice is let's look for the boring things and do that.
Wonderful, wonderful. Thank you so much, William. Thank you so much for your time. It was a wonderful conversation. Thank you so much.
Man, this was a lot of fun. Thanks for having me on.